Hey guys, so welcome to another episode. This is going to be the continuation of our earlier episode talking about the S&P 500. Switch shirts. This is exactly what we're going to talk about. Green twos going above green ones, and I'm going straight to screen share on the S&P 500. We're going to pick up where we left off, and I'm going to talk about what happened. Because I just looked at it. I was on an interview. I had no idea what the S&P 500 did till just now. Where is it? Okay, we're gonna get to the daily chart in a second. I want to talk about the 10-minute chart. So here's where we left off. When I ended my last video, we were here hitting the stop loss. And because I would not want to risk it, because that was the breakout did not hold. Now, what did I say before I ended the last video? Go back and rewind. My memory is pretty good, even though I'm getting old, okay? My memory is good. I said, you know what? When the candles reset and I get a new green above a new green 2 above a new green 1, I will be interested in the long trade once again, okay? And did that happen? Oh, yes, that certainly happened. So about a half an hour after I got off the stream to do a podcast, and I forgot what time zone I was in. I could have stayed on with you guys for longer. I thought I had a podcast in like 15 minutes. It turns out it was in an hour and 15 minutes, and I just got off that podcast, so I wasn't paying attention to the market, but I just did. So here's what happened. We pulled back into that zone, into the original zone of entry. I would have been uncomfortable with that day trade, assuming this was a day trade. And from there, we broke out again. We finally broke above that area. So we were stuck at this resistance. I thought we were breaking out right there. We positioned the trade to break out right there. That did not happen. When your trade does not break out, this is what I expected, by the way. When your trade does not break out, you get out of that trade. This is what real trading is. You get out of that trade and you try again. Now, what happened later? We pulled back a little bit, made a higher high. Hell, you can even draw a trend line right there if you like. You should see some of the dumb comments in the last YouTube stream. They are, man, I really don't want to use the R word, but they are certainly, you know, I gotta drop this thing. There are certainly a few Cheerios shy of, you know what I mean. Yeah, so you established a higher low, and then you started to break out. This is just a 10-minute chart, right? The 10-minute chart, I really don't want to move this line, so I'll just, I have to draw a new one. Maybe I'll make it purple, right? Like you have established a critical high right here. Hell, you can even make it the setup trend line. You've established a high. You're actually establishing a giant ascending triangle. Maybe not. Well, whatever it is, right? It doesn't matter. You broke out. I'm sure there was good volume assigned to it, but it doesn't matter to me. Volume is irrelevant to me, okay? We're breaking out in price. If you missed the buying of this breakout or you felt unsure this breakout would hold, that's okay, because you have another trade waiting for you based on sequential. And based on sequential, you have a green 2 going above a green 1 right there. Again, as a futures trader, which I used to trade S&P 500 futures. Jesus, this would have been an entry at 26, let's say 26.30. Let's say you were late to the party, okay? You got in at 26.30 on this breakout. Within 10 minutes, you were at, what's the high of that candle? 26.45, a $15 move on the S&P 500. This is the kind of move I would dream about the night before, that I enter a trade and within 10 minutes, I am up 15 points on the S&P 500. And if I did that, I would make, I don't know, at least $3,000 that day, right there in 10 minutes. Okay, and that's on my minimum trade. Back when I was trading, it's a leverage trade. It's a leverage trade. You may not want to do this, right? Unless you actually know what you're doing. That's what I used to do. But the rule set is the same. The same exact reason I entered the bullish trade right here on a green 2 going above a green 1 is the same exact reason I would enter it an hour later. And now I'm even more confident because we have now finally broken this area of resistance, which I anticipated of breaking, which I anticipated on breaking just a single hour earlier. And it didn't happen. So what? So you try again. Okay. And now, how did that trade work out? Well, 20 minutes later, that trade was back in the red. So there's, again, it depends on your time horizon. It depends on your style of trading. Would I have taken some profit at first sign of weakness? Hell yeah. By the way, if I saw a candle this big on the S&P 500 in 10 minutes, the first thing I would do is I would have to go digging deeper. I would have to go to 5 minutes and see if there's a reversal candle, if it's moving that fast. There wasn't. So I probably would have had difficulty exiting at the top. I don't like going sub 5 minutes, but in this case, we can try the 3 minutes. Was there a reversal candle? Not really. That's only a 6. Ironically, the 3 minute bounced off a 9, but I wouldn't have been looking at it over there. If we go to 1 minute chart, whoa. If we go to a 1 minute chart, well, the indicator is timed out. If we go to a 1 minute chart, it wasn't very helpful either. So this would have been a very difficult exit at the very top. So let's not cherry pick. Let's not say I got in perfectly and I exited perfectly. Probably not going to happen. Okay, I know I would not have been able to pull it off. So the most likely scenario is over here, I'm thinking moon. Over here, I'm thinking reality. So I take my profit, some of my profit here. I take the rest of my profit at break even, right? Now, and that's it. Now I'm done. I'm not waiting for tomorrow. Now that's as far as day trading goes. Let's talk about the bigger picture. The bigger picture is this daily candle. This daily candle has broken above the 2600 threshold. Go back to my original tweet. Here's my original tweet. I'll pull up the picture once again. Read the last line in that tweet. However, if we are trading above 2615 on Monday in 3 business days, it's very likely that the low for the year is in. We'll update tomorrow. Stay tuned. This was sent out a few days ago. So normally I wanted to say Friday here, but I don't like having positions over the weekend. I think it's stupid, even as a swing trader, unless you're absolutely confident. So you want to wait till Monday. Can the market get away from you? Can the market be at 2,800 by Monday? Yes, it can. And if that happens, well, you admit that you missed it. Now, back to the daily trade using sequential. I never trade the green 1s after green 9s. I would never enter a swing trade here. I would exit on the 9. I would let this candle go. And tomorrow, if only tomorrow wasn't a Friday, I would be looking to enter on a green 2 above a green 1, because at this point, I am looking for continuation. What kind of continuation am I looking for? Well, let's go back. Let's go back to this vicinity here. It's the same daily chart, okay? Let's take a look. You see how we had a 9 near the low? I'm looking at the end of June. This is a daily chart of the S&P 500 using futures. I'm looking at a low, bounce off a 9. We got the 9. I would have said exactly the same thing. Hey, this 9 is potentially going to lead to a 1 to 4 candle correction, a slowdown. But if it doesn't, do not trade the green candle following the 1, but do trade. Well, you could trade. Let me not get sued here. You can trade the green 2 above a green 1. Again, let me stop my camera. I'm wearing it. I'm wearing the damn thing. If a green 2 is above a green 1, right? That's what we're trading here. It's exactly what we're trading. Let's go back to screen share. Here it is, right? Green 2 above a green 1, above a 9, after the market has proven to you that it's not going to take a significant pullback. You know, this trade immediately started making you money. Did this trade go into the red at a couple of days later? It sure did. Okay, it did. What do you do when that happens? Well, if you're not comfortable with the trade, you get out. The moment you're not comfortable with the trade, you get out. If you held through this and you left your initial stop loss alone, how would I have done stop losses? Again, this is what we teach at the workshops. Initial stop loss probably below the swing low. Okay, first chance I get, I want to raise that stop loss. So after the 2 candle went up and the 3 candle went up, I probably would have raised that stop loss to below the 2. If I would have left it below the 2, my stop loss never got hit and I went higher. I had a price flip. Would I have exited on a red 1 in a tiny profit? Maybe, I don't know. Hindsight's always 20/20. I probably would have been out of this trade. If I'm out of the trade, I'm out of the trade, right? But what am I expecting? I'm expecting that this is going to continue going up. Is it always going to continue going up? Absolutely not, okay? But it's proven to me that it wants to go higher when I see something like this, like 913s at the high. This time you shorted somewhere in this vicinity, turned out to be a great trade, okay? The point is, not every trade you're going to make is going to be profitable. So, but it's the same concept. You can have a 9 and then the numbers will just go higher. They'll just keep going higher, okay? Now, this case is different. This is why I do not trade green 1s following green 9s. Look at this monster 1 candle. Look at the following day. Never traded above it. I never went back in. That was a pullback. Now we go up again. Here's another 9. This time you went lower. 1 to 4 candle pullback, then you started to go up. Okay, the opposite happens in the other direction. It's all the same. Okay, so let's go back to the present day. What am I thinking for tomorrow? Well, for tomorrow, I'm praying to God that the market doesn't go to $2,700, okay? Because I want to be able to enter this bullish trade, assuming I want it to be in the market. But I don't want to do it on a Friday. I want to do it on a Monday. So what I want to see tomorrow, I want to see the market stay between today's closing high and this purple line, okay? I do not want to see a green 2 go above a green 1 tomorrow. I want to see it lower, because if it does, I'm probably going to be a chicken and I'm not going to enter the swing trade. But if the following day, on Monday, I get a green 3 above a green 2, staying above the 9, I am now confident that we're going to get another 9 to the upside, okay? Is that going to happen? Who the hell knows? But I have a statistically probable trade to do it, okay? That's it. That's all I had to say on the current situation. I wish I could have been, doing a live video as this was happening, but that didn't happen. I was doing an interview for another podcast, not live streamed, recorded. It'll be out soon. It was with FUD TV, perfect name. So look for an interview on FUD TV. Oh, I wasn't even like mic'd up, but I hope you guys heard it. Anyway, audio should be better now. Well, that's all I got. Bitcoin, haven't looked at it. I don't see anything of importance. We're on an 8. We're on an 8 in a reversal candle in the hourly chart. So chances are Bitcoin's going to pull back a little bit next candle, next hour. All right, guys, I gotta go. I gotta go into the city, and I just wanted to bring you a quick video. We'll do a quick plug for Unconfiscatable. Please check out the conference in Vegas. I will be in Vegas on Monday. I will be busy, so you can try texting me, but you're not gonna get a reply back. But poker is sold out. Carnivory is sold out. or we have our conference tickets. So please join us, 0.1 Bitcoin or 4,500 USD. My workshop is Thursday, Tyler's is Friday because I want to attend if I'm not too busy, and Jimmy's is, of course, both of those days. Please check it out. If you're interested in using the sequential code, you can go to my website. You can sign up for my workshop where I teach this stuff. You don't have to learn it. You can just Google it. I mean, do whatever you like. You can write your own code too. It's public knowledge. The map is public. But if you don't want to spend 1,000 hours writing code, you can check out the indicator page and get it from me. Anyway, all right, guys. Enough of this. I will talk to you all on the next one.